in California. Malta. Interesting. Good morning. Georgia the state or Georgia the country? With a name like Thomas, I'm going to say it's the state. Well, it's excellent to see you all here this morning, and thanks for coming. We're going to continue on with um, conversation, a topic we started with when we were sponsored by Ninja Trader on Thursday. It's kind of a two-part event. The first part was talking about the mechanics of or why um, divergence does what it does. What makes how do we measure divergence, and what are we measuring it with, and how is that created? So we covered that on Thursday. If you didn't get a chance to see that, we did send out a video replay of that, and Ninja Trader also did. If you didn't get that, let us know, and we'll make sure you get that. However, I am going to quickly go over a few parts of that again today. Not most of it, but a couple parts I'll hit on again, and we'll hit it relatively quickly so that those of you that already saw it don't have to endure it again. Um, so, we hear about this divergence thing, uh, and many of us have learned about divergence and trading divergence, but we don't really understand what's going on and why it's so powerful. Um, when I first learned about divergence, nobody really explained it to me. They just said, when you have divergence, it's a good thing. But I didn't know what that meant. I'm like, okay, divergence, good thing, fine. Um, but in trading, it's not always important that you know everything. But if you're going to trade divergence well, it's better to understand what's actually happening so that you can understand what it is you're taking advantage of and learn to take advantage of it at the most opportune times. Okay? So, this is what we're going to talk about today. Some quick housekeeping stuff here. We uh, I'll take questions at the end of this event. Okay. If you ask questions, if you have questions, feel free to ask them. Okay. I see lots of our bunt traders, people that trade in our trading room with us, people that sometimes come to the trading room. Sometimes some people I see here just use our products and trade our system. There's one of our daily trade room guys, Peter. So feel free to ask questions. These folks can answer all your questions for you. Also, my associate Praveen is here to help you. Praveen is our tech support guy. Yep, Praveen is our tech support guy, and he is here to answer questions for you. Just don't ask me questions because I'm not going to be reading the chat. If I read the chat, I get off course and I may not be able to stay on topic and start to stray and things take too long and like that. So I won't be reading the questions until we get to the end of the presentation, at which time I'll answer questions, as many as you have, as long as you have them. Make them really hard if you want to. See if you can stump me. That's fine. All right. So that being said, I actually cover up the chat box so I don't accidentally read it. And I'm going to just start with the presentation, okay? But feel free to ask questions if you need to. Lots of people here to help answer your questions for you, okay? All right, so trading divergence. This is a really, really good image for understanding exactly what it is that we're trying to take advantage of, okay? I like to use these static pictures for things like this so that your mind can pretty much tell you exactly what's likely to happen. Okay. Now, if this runner doesn't suddenly jump off the path and he stays on the path, he's going to run into all of these other runners. All of these other runners have are beginning this push this way, and they have a lot of push behind them to start the push that way. So current price is heading in the opposite direction of momentum. When they run into each other, what's going to happen to this guy? Okay? This is what's happening in the market when divergence occurs. Divergence is price and momentum are headed in two different directions. Okay? And when momentum changes, price is forced to follow. So when this group, if this guy doesn't jump off the path here, we'll make that assumption. If this guy stays on this path, he's not going to be able to push through all these people to keep going. He's going to get knocked about, and chances are he's going to move this way. Okay? This is what we do every single day. Okay? So how do we do this? We have to make measurements inside the market, and we have to make very accurate and very relevant and very quick measurements on what's going on in the market right now. And so we're going to measure flow. Okay, just like you think about all those runners. Think about that as flow. Okay, so we're going to measure flow in order to anticipate something. Okay, so it's important for us to measure flow, but flow, a lot of people learn I want to measure flow because you want to get into the flow, right? You want to jump in. You often hear the reference to jumping in front of a freight train or catching a falling knife. That's because a lot of people are measuring flow and they go, oh, I want to go with the flow. So a lot of people fail at trading thinking that this is what they need to be doing. And I did as well. But what measuring flow actually does is help us to anticipate when exhaustion is imminent. Okay? So when we can measure flow and determine when we have a divergent condition, those two things together give us an incredibly powerful opportunity to understand what's about to happen in the market. Okay? So this is what we're doing. I'm going to refer back to this because I am going to show you some trade setups. I'm going to create some trade setups, and then I'm going to ask you questions about those trade setups based on what we're talking about now. What would be a good trade setup? What would not be a good trade setup? So this information, I know a lot of you come here and you say, oh, just show me how to trade. Okay? You need to understand this before you understand how to trade with exhaustion, with order flow, and with divergence. Okay? So order flow. We can't really talk about the importance of divergence until we understand more about order flow. And this isn't level 2 orders. Like on your trading dome, you see all the numbers changing of people that are placing orders and taking them off. We're not talking about that. These are actual processed orders that have gone through the market. So when we combine order flow with divergence is critical in being able to understand these high probability trade setups and why these trading setups work so well. Okay, so everybody understands, if you've been in trading at any time at all, you understand what reading the ticker tape was. That's what the traders, mostly retail traders or small companies would do to try to understand what the smart money is doing, what the big boys are doing. They're trying to analyze all the buy and sell orders at each price point to determine what percentage of orders are buy orders and which ones are sell orders, and the rate at which these orders coming into the market, or the flow into the market. Okay? This can often tell us what's about to happen next. All right, so in today's markets, we use time and sales windows, but you can't. I mean, if you've tried to use time and sales in your trading, you probably realize in just a very few minutes you're kind of getting hypnotized and you can't really shift your eyes around fast enough to get a real good handle on what's going on in time and sales. Okay, but this is how we read and understand what's going on. So I'm going to talk about this a little bit more when we talk about the indicators that we've developed to help us understand what's going on in order flow. But before we do that, there's still a little bit more groundwork that we need to understand so that the trade setups I'm going to show you make sense. Okay, I'm going to refer back to this stuff. So make sure you understand. I'm not, this isn't just general knowledge. This is very specific to what we do. The better you understand this, the better trader you'll be. All right. Now, the smart money has been and will forever manipulate the markets. Okay. It's very important to know what's going on in these markets when the smart money is doing this. There are places in the markets that we can identify as being manipulated. So let's do it. Let's back up real quick. Okay. During this whole, if you go look at any trading chart, you can see this general pattern. Now, this is an extremely oversimplified version of this pattern so that it's easy to understand. But if you go look at any trading chart, you'll see this pattern repeated regularly, albeit sometimes somewhat hidden because they don't really want us to know and understand what's going on. But let's look at this anyway. All right, now the market makers, these are the guys with all the money and all the power, have identified an area of the market where they want to accumulate as much of an instrument as they possibly can at the lowest price that they can. So they're going to accumulate at a relatively low rate. They're going to then stop accumulating and they're going to stop sales and they're going to mark up the price a little bit, accumulate some more, mark up, and they do this. And I'm not going to go. I go into more detail on this on what's actually happening here on every step. We have another event that we recorded. It's on our YouTube channel. Go take a look at it. It's the volume spread analysis. I'll go into a lot more detail. I'm just going into short detail on this because I just want you to understand this as a general nature. If you want to know more specifically, go watch that video on our channel. All right, so we've got the big boys doing all that. We're interacting in here, us retail traders. Generally, we're going to be interacting in this area. In this area, we're not going to be so much because price is just channeling. We're not really all that interested in what's going on. We're just falling asleep because it seems like nothing's happening. So they're buying up all through here. Then they get up in here, and this is where, see, they want to force price up. That's just why they do this markup. They want to force price up because they want to start selling everything they bought in here and in here. They're going to start selling it here. They're going to do it very slowly, quietly. They're not going to do a whole bunch at a time because that gives away what they're doing. They don't want people to know. Again, price is channeling. We fall asleep. We're bored. We say, oh, the markets are dead today. Point in fact, they're not dead. The big boys are just killing us, and they're distributing and selling to people who are just determined to be buying or selling this right here. And eventually, what happens is they're going to run it up. They're still the majority holders of these assets. They're going to run price up and then dump them all on the market and cause this huge markdown. Go look at a trading chart. You'll see this constantly It happens every day, several times a day. Okay? Now, we're not terribly interested. We don't have any way to know what's going to happen here or when, or here, or here. We can tell you what's going to happen after they have manipulated price so that price can start going up or down, whichever way they're going. It goes either ways. Excuse me. So we're looking for these areas where we have these sudden and unexpected upthrust bars. They're sudden and unexpected because we've just been kind of channeling in here. And then suddenly something happens and price just shoots up. You see it every day, right? All of you have seen it. You're sitting there wondering, what the heck just happened? Well, this is what's happening. The rate of speed, now we're measuring every single bar. And when the rate of the orders being processed are such that there's no way us little retail traders could trade that fast, then we know it's highly probable that this is a market manipulation. And if it's a manipulation, they're doing it for a reason. And that reason is so that they can begin this either accumulation or distribution again. All right? That's now, excuse me. Truth be told, there's a lot of ways to manipulate the market, and they're getting better and better at it all the time. But essentially, many of them work this way, and these are the ones that we're looking to take advantage of. Okay, this is our edge. All we need to know is that these manipulations have taken place, and that something is likely to happen next. Okay, so this is how we're measuring just price and order flow. All right, we also have the ability to, we have another indicator called a ricochet. So we have our speed tick here and our ricochet here. This says relative order flow. This saying that the speed of the orders came in at a certain rate. This says that the acceleration was extreme. Okay, both of these give us a good idea that something is likely to happen right after this bar. Okay, that we're likely to see this. Now, we don't know if it's going to be this or is it going to be this. We don't know. All we know is that inside this bar, there's information telling us that something predictable is going to happen. If you have something predictable in the markets, you have an edge. Okay? Now, the smart money sets us up to create opportunities for themselves. Okay? Some of us will win because their manipulations just happen to go in our favor. Most of us will not, and will get caught off guard and will react predictably to this sudden and unexpected change in the market. Okay? We're going to get off guard and force it, and we'll be doing something emotional. Okay? As soon as we start trading because we get scared or panicked or nervous or greedy or whatever, then we act predictably and we're trapped. All right? So knowing this, and many of you probably already know about this, but you might start thinking, that seems to me that there's an unfair advantage and that maybe you just can't win this game. Maybe you can't get on the right side of the trade. So I think I'll just quit trading. And a lot of people are more than eager to blame the big boys and the exchanges and the rules and laws that allow for these guys to do what they're doing and to take advantage of the market. Well, they're allowed to because they provide liquidity to the markets, which is essential. So they're given all of these opportunities to be able to do this. But there are rules in place that keep them from being able to hide when they're doing this. They try real hard. But if you know where to look, if you know what you're looking for, you know how to find them. So we got to know when to trade and when not to trade. So obviously, we don't want to trade when price is just moving sideways. We're typically going to see pretty low volume. Nobody wants to trade during this. Now, some people will for pretty dumb reasons, like they get bored or emotional or scared or whatever. The speed of the orders are generally going to be also going through very slowly. If you pulled up a time and sales window, you would notice that nothing real special is happening, no real volume going on. We're going to be kind of lulled to sleep. Okay? So we don't want to be trading during this time. Okay? Instead, we're looking at these upthrust times when price is pushing really hard. Now, the interesting thing, and this is why I say it's important to know where to look and when to look. These big boys don't throw everything they have at it all at once. They're going to do just what they need to do to move price. They actually want to keep the volume down very low. Why do they do that? Because they know that all of you guys have volume indicators on your charts. And if you see a sudden spike in volume, that's going to get your attention. You're going to know that the big boys are doing something. So they want to keep it on relatively low volume while still being able to control price. However, the speed at which the orders come in is a different story. Okay? We're going to see orders being processed through the exchanges very quickly, really fast. And they can do this very fast, but still not be on high volume. A lot of people spend so much time looking at volume. And we do, we look at volume, but only the right kind of volume. Okay? The speed of the orders going through is essential. This is where the term speed tick came from. Okay? So we're going to be reading the rate at which the orders come through. The numbers are going to be generally lower volume for the speed at which these orders go through. Now, yeah, volume may pick up, but they're going to do everything they can to keep it as low as possible while still being able to generate enough orders to manipulate price. Okay, so I hope everybody's understanding what's going on here. This is key to understanding how order flow works and how to take advantage of it with divergence. Okay, so we're doing order flow analysis with our speed tick, and what we're doing is I created a histogram. I paid a programmer to do it. But I told him my theory and I wrote it all out for him. And I said, I want you to program something for me that instead of me staring at a time in sales, I want to look at this histogram kind of like it's a speedometer, right? So I want to be able to see that if the rate of orders being processed is so fast that it's highly unlikely retail traders can do it, then I'm going to know at that point this must be manipulated. If it's being manipulated, all I have to do is ask myself why. Why? Because they're expecting us to react a certain way. So let's say this is the speedometer that says, this line says, okay, this is way too fast of a speed for orders to be processed for it to be us little retail trader guys that are trading, 1, 2, 5 contracts at a time. So there's no way that we can trade this fast. So if it increases beyond this line, then let's print something on the chart. Let's take that information and put it on the chart, and then we know right there, right in front of our eyes, that we know that orders are flying through the markets. Okay? But it doesn't have to be a lot, but they just have to be being processed very quickly. All right? Most people aren't measuring that. That's why they get away with this over and over and over again. But that's how we know where they are. All right? So retail traders are unlikely to be able to trade that fast. and right on the current bar. This, what you need to understand, I'll show you this. We have videos that I'm going to show you. We're also going to go over the trade setups, and I'll show you how this works. On this bar, when this bar is being manipulated, as soon as this histogram hits this line and crosses it, this prints on this bar live real time. Okay? So price is being manipulated. That's one thing we know. Sellers are going to start taking profits here, which is one of the reactions to price manipulation. People start seeing that there's a good opportunity to take profits because prices move in a long way very quickly. Buyers are getting stopped out or exiting. Demand overwhelms supply. Whammo. Price turns because new demand for the new low price. There are people waiting down here for this new low price, and they feel like this is a value area where they want to buy, and price bounces up again. Okay? Now, this is all what initially may seem a little bit overwhelming. Seems like a lot of stuff. It seems like a lot of stuff to know. Okay? So maybe now you get it. Order flow is the thing. Maybe you understand it, but you're not sure how you're going to be able to learn how to use it. We got that for you. There's more. Okay? This is where divergence comes in. Now, just so you know, when I first started trading this pullback system, this was the second indicator I ever developed, and it changed everything for me. Okay? So I used to trade off of just this and some support and resistance lines very successfully. But I started looking for more ways to qualify this trade. Okay, if this was a trade setup, if I got in here and up it went. All right, so I started thinking, are there more things going on inside these bars that might preclude this move besides just order flow? So I started looking at divergence. Now, divergence was something I had learned way back during the struggles of my trading. I don't know, maybe some of you don't know, but I started trading just like most of you. I was a contractor. I struggled, had a terrible time at it. I tried 50 different things, sometimes all at once. I was just horrible, a horrible trader. But that's another story. If you want to ask me about that during question and answer, I'm happy to talk about it. Divergence is when price and something else are no longer in agreement with each other. Okay, most of the time they are in agreement, but when they get out of agreement, we have a divergent condition. Okay, so this divergence can be the asset. It could be, you know, whatever the instrument you're trading, and an indicator, which for us, we're going to generally be looking at a momentum oscillator, because this is what we talked about for order flow. We're looking at momentum. So we see here we have a condition where we have a divergent condition. This where price is setting a new high, swing high, but the momentum is setting a new swing high, a lower swing high. Okay? Very simple. Yet it's very difficult for people to use because of historically how we've had to use divergence. You kind of almost have to see it to trade it. And there's so many other things to be looking at and thinking about while you're trading. Divergence is one of those things to easily slip by you. Okay? So let's look at how this is calculated. We did this on Thursday, but some of you weren't here on Thursday, so let's look at it again very quickly so that you can all get an understanding of what it is that we're measuring when we develop this oscillator. Okay, everybody uses these oscillators, right? Or if you don't, maybe you should be, or you're thinking about it, or you have in the past. But this is a very typical looking oscillator. This particular one is the momentum oscillator. It's called momentum. It's just that happens to be the name of it. It's got the most simple algorithm for calculating this oscillator. So we're going to use that to show you exactly what's happening here. You know, there are others. There's the RSI. It's got a little bit more complicated of a algorithm. There's a CCI. There's many more. And so we're going to just look at the oscillator. Okay, and this was to calculate the momentum oscillator. We're going to look at the closing price of the current bar minus the closing price of X bars ago. So we're going to say maybe 10 bars ago for this particular example. All right, so we've got a chart here. This is how we're going to calculate this oscillator that we see on the bottom. Okay, so here's a trading chart. And we're going to call this the current bar. We'll pretend that none of this is here yet. We're going to call this the current bar. And then we're going to also go back 10 bars. And we're going to take the closing price of the current bar. We're going to take the closing price of 10 bars ago. We're going to subtract one from the other. And that's going to give us a number. And that number can be plotted now on the graph below. Okay, on the oscillator below. We'll do the same thing again on the next bar. We're going to take the closing price of the next bar. Excuse me. The closing price of 10 bars back, and now that gives us a numerical value and another place to plot on the oscillator. We can just continue this on and on and on every single bar, the current bar. We go back 10 bars, we continue this calculation, and we just do it over and over and over again. Okay, so now we know how oscillators are calculated. Makes much more sense now to understand how we're going to measure for divergence. Okay, so divergence occurs when there's a difference in the slope between the swing high and the swing low, the swing high of momentum and the swing high of, swing high of price and the swing high of momentum. Notice this one's higher, this one's lower. That's divergence. All right, so I'm going to simplify this a little bit very quickly. We did this on Thursday, but I'm going to do it again real quick. So let's say that this is an oversimplified chart. I just did it this way because it's easier to see and understand. Okay, so this is a chart. These are candlesticks. This is momentum. All right, so momentum and price very typically run together. They're very much in sync. Okay, the magnitude of change over the last X bars is almost identical. And this is the typical relationship. All right, so nothing really happening here. You can see anywhere along those lines, you'll see that price and momentum are generally moving in the same direction, or almost exactly. Now, here's what happens when price and momentum get out of sync. Okay, you'll notice that the magnitude of change has changed, and there are places because of this where price and momentum have diverged. So there's a divergent condition. You notice over here, no divergence, no divergence, no divergence, no divergence, no divergence here, no divergence here. We have divergence here. So when these lines get out of sync, look what happens. Price starts to catch up and follow momentum before because momentum has already started to head up. Price is just a little bit slow to follow, but it almost always does. So let's look at this again. All right, so quickly. Now, at a glance, very quickly, you may look at price and you may look at the oscillator and you go, no, those are pretty much the same. Okay, they're moving in sync with each other, which is typical of the markets. If you're not extremely adept at reading divergence, you'll miss something very important that's going on here. If you look at price, it's just kind of channeling here. This is just kind of channeling around. Then we get this hard drop, then this drop. Then this kind of bounced up, came over, and then went sideways, bounced up, came over, went sideways. Okay, these are all, this went down here, this went down, this went up, sideways, down. Okay, all right, these are no divergence here, right? So let's look. Let's put some lines on it. So you're right, no divergence there. Yep, no divergence there. They're both moving in the same direction. Bam, there's divergence, and we didn't even see it. Look what price did. It was hard to even notice. Here's the kicker about divergence. And it's just so simple, and it happens all the time. When momentum turns before price, price will typically follow. This is what makes divergence so incredibly powerful. Now, why haven't most all of us been trading divergence and only divergence for a long time? As I mentioned, it's kind of hard to see, and there's many different ways of measuring or defining or calculating divergence. There's different definitions of divergence, different algorithms used, whether which part of a bar are you going to use, how many lookbacks or swing highs and lows are you going to measure, combinations of indicators, whether you're looking for classic patterns, hidden patterns. It's very difficult to read all of these things on the fly. It's difficult to see which direction to anticipate price to move. And the worst part for me, and why I gave up on it so early when I was learned about divergence and I tried to trade it and I struggled with it, was that I never really knew if I had done it right. A lot of times you have to make a decision based on divergence, and so you go, oh, and you jump in a trade, and then you start studying and drawing lines, and you start drawing these lines. You go, oh, that wasn't divergent. Oh, well, I'm in the trade. Maybe I'll get lucky. I'll just stay in the trade. So we start using hope as a trade plan instead of absolutely knowing for sure you did the right thing. All right. So remember, I started thinking about measuring, and I want to measure every single bar and everything that's going on inside that bar, and every market condition I could get my hands on at that time that would tell me that something is likely to be changing quickly, not just order flow, but if I could get something else that could tell me when this and order flow are happening at the same time, well, that increases the probability dramatically. So instead of all these stupid lines and trying to read these lines, and most of them that print backwards and several bars later, created this indicator called the flash. And now we don't need the lines. This is all you see on your charts. This particular indicator is using the relative strength index oscillator, or the RSI, and it prints on the open of the current bar, telling us we have a divergent condition. Now, I used just the flash for many years, and then the algorithm was so good, I thought, I should apply it to at least another oscillator so that we can get a more tuned look at where potential divergences are happening. Instead of just using RSI for momentum, there's several different momentum oscillators. So I thought, well, let me try this with the MACD. So we now have an indicator called the MACDiver that does the same thing. We'll print on the open of the current bar to tell us to anticipate a divergence. Now, we also developed another indicator called the Super D after using the flash and the MACDiver for so many years, Super D, or super divergence. So I'll show you that in a few minutes. But what I really want to show you was what came even after the Super D. Okay, so here's an image, and this is what I'm going to be showing you how we trade this. Here's an image of one of our indicators, and our first indicator, and this is our indicator called momentum. First one that we look for when qualifying a trade setup. and I'm reading this momentum. The momentum, the bars go from black to gray to white, and that's telling us that we have very strong momentum. Why do we want to do that? Let's go back to that earlier slide. We're reading flow so that we can anticipate exhaustion, and that's what this is doing. This pink outline is doing the same thing. It's telling us, it's not reading this hard push. It's simply telling us that price is now in an overbought territory. When price gets overbought, it gets particularly weak. Okay? It doesn't want to continue to push. People are recognizing that we're outside the value area of this instrument potentially, and that it's selling for a much too high price. It's at a higher value than most traders agree to pay for this, and so price starts to drop. Okay, so this is our overbought condition. Now we combine these things with a confluence of our speed tick, our McDiver, our flash, and some other indicators. And we have now what we're calling our rock star. And then we put that with our support and resistance. Here's where we have a trade setup. This right here is our trade at the open of this bar. As soon as this bar opens, we're putting a trade on here. All right, that's our rock star. Now, let me show you what the rock star looks like real time. I'm going to take you to, let's go way back in time and look at yesterday. This is what we do every day. And I don't have to go scroll backwards on a chart and find, I'm playing around. The reason this is a different color is I was playing around with a new tool that we have called the Essential Add-on Suite, and you'll all be hearing more about that. So this is our trade room. This is our people that are trading in the trade room. Very friendly group of people, a lot of fun to hang out with. And here comes a trade setup. Now I'm going to put this is live from inside the trade room. I'm just going to let you listen to what happens in the trade room, how we actually call these out. Got a naked rock star on the view. Almost before I could say anything, it's +5. I put the trade on and looked at the chart and then looked back at the dome and it was gone. I'm like, oh God, what happened? This is our naked rock star. Look how hard it's dropping here. Look how strong the potential for exhaustion is. Got dark bars, got oversold, got pullback alert here and a speed tick here, open of this bar, and a rock star. Now, this is ideally you'd want to get in here, but what happened here on this one is immediately when it opened, it dropped. So by the time I got on it, it was down here, and so it didn't have far to go before I got my +5. Maybe you're on this one. Same thing. This bar oversold. Now, this is a good naked rock star because, see, it is outside of our arrows. Inside here, between these arrows, we're not going to take this trade. Outside, we're going to. This is saying that there's that it's broken outside of the zone, which is more like an oversold kind of condition. So we got two winning rock stars, one right after the other. Or naked rock stars. We call those naked because there's no support or resistance behind them. Alright, so we got another rock star on the 6E. a decent fill when it backed up a little bit. Now it's a naked rock star. Naked because it has no support line behind it. The regular rock star, this line was behind it right here. But without that line, it's a naked rock star. And it qualifies because it was oversold, had a pullback alert, and then rock star. And it's outside of the thereof. And I got the +4. Didn't quite get the +5. All right, +5. All right, now, usually when people see this, their first question is, well, how can you make any money? I can't make any money at 5 ticks. And for the longest time, I didn't quite understand that people didn't understand that. Whoops. Um, and here's the problem. And a lot of us get into trading and we start, as we should, trading small lot, sim trading, trading single lot contract. And you keep trying and trying and trying to trade and you're not having a lot of success. So you still end up trading single lot contracts. You have a very small account and you want to be able to make a lot of money with this very small account starting with just a single contract, which is exactly what you can do here. The idea here is you get good at trading for 5 ticks. You get really good. You become a master at trading for just 5 ticks. And then you watch your account grow a little bit. And then you trade 2 contracts and you do the exact same thing. So we're not looking to teach you all of this very complicated money management skills so that you can go and trade a single contract for 50, 100 ticks. Nobody ever told me when I was struggling and I was trying to learn how to trade 20, 30, 50 ticks because I thought, well, that's the only way to make any money, so that's what I have to do. Nobody ever told me that emotion management was going to keep me from being able to do that. That it was nearly impossible to manage your emotions using a single contract and try to get 20, 30, 50 ticks. Okay. This is where we're all struggling. Excuse me. It's kind of like trying to run up a sand dune. You know, you're just running like crazy and you're just not getting anywhere. So I decided, well, we're going to trade for 5. I'm going to trade for 5 ticks and I'm going to see if I can learn how to do something very small, become a specialist, do it over and over and over again, start putting money in the bank, and then add a contract and just keep doing that and keep doing that. This is something a lot of people miss when they hear, oh, you only trade for 5 ticks. Oh, I'm out of here. I'm not going to do that. That's not enough money for me. Well, it certainly can be if you take a little time and work at it and get good at it and practice. And we teach you how to practice. So I know there's plenty of you here that believe that trading has to be complicated because that's been your experience with trading. It's been very complicated. It's you read forums, you watch videos. It does not have to be complicated. What I've shown you may appear to be complicated because you're unfamiliar with it, but it's really extremely simple. So simple, I've been trading this. Our trade room has been trading this for years. And it is a very simple, straightforward thing. I never really, people kept saying, yeah, wouldn't it be nice if you combine all of these into a signal? And I thought, yeah, but it's really not necessary because it's all here. Well, I went ahead and did it anyway, recently. So we have our new indicator called the Rockstar. This is called the Rockstar because this trade setup got named the Rockstar trade setup in the trade room because it just kills every time. Not every time, but a lot. All right, so I thought, well, we'll just create an indicator when we get a confluence of an overbought condition, oversold, a speed tick, and then this super D, which is 7 different momentum oscillators. Instead of these two, the Flash and the McDiver are also inside the super D. Okay, so we've tuned it so that instead of all of this, if you don't want all of this, if this makes it too complicated for you, just do this. Okay, this is our Rockstar indicator. As soon as at the open of this bar you get one of these, then you'll know that there's a pretty good chance that price is going to drop here. You still may want to add some qualifiers to it. We recommend it. But you may also have your own trading system that you're very happy with, and you just want to add this to it. We have a lot of people doing that now, more than I ever expected, to be honest. So maybe, if you got a quick understanding of just a confluence of a few things, a few simple rules, and lots of practice, all of us can do this. We learn this trading thing the same way we learn everything else that we want to get good at. We practice, we gain experience, we do it over and over and over again, and eventually you get pretty good at things that you do like that. Okay? Now we're going to give you a free week in the trade room. Sorry, the sign up. You can just send us a request at the support at theintentionaltrader.com and let us know that you want to do a free week in the trade room, and we'll send you the right link to get you signed up. We've got the best trade room out there. We've got the friendliest people. We're fun to hang out with. Not a lot of jabber going on unless we have something specific to talk about. We will sit quietly and wait for a trade setup. Then we share our trades, wins and losses. We share them. It's kind of a different type of environment than you might be used to. Okay, so if you'd like to check us out, feel free to come hang out with us in the trade room. We've got a special that we're running for you guys. We did this on the at the Ninja event, and we're going to offer it to you guys as well. We've got the starter bundle. The starter bundle is going to include the Flash, which is the lightning bolt, which is the very first divergent indicator that we created. It's going to include the speed tick and the OBOS, or the overbought, oversold. Also going to include our support and resistance lines, and a few other little tools that just makes our trading a little bit easier. With that, we're going to give you either a month to hang out with us in the trade room, or a month in our program that I told you about that teaches you how to practice your trading. You may think you know how to practice trading. You need to look at this fast forward program, and you'll suddenly realize, oh, I haven't been doing this. This is what practice is really like. You practice what you trade. Scrolling around on static charts and adding different indicators and reading forums and watching videos and coming to webinars and all of that is not practice. Most people think sim trading is practice. That's not practice either. That's game time. That's when you put to work the practice that you've done. That is not practice time. Okay? It's also not very efficient if you think of it as practice time to try to do it during trading hours. We can get you, in the trade room, we might take 5-10 trades in a session, where in that same number of hours, you could take 30 or 40 trades in practice. Okay? Very important. All right. Here's that's the end of the presentation. We hope you guys, if you have any questions, send us email. If you're ready to go ahead and invest and get started, we're happy to help you get started. So send us information down here at this email address down here, and all of us here at the Intentional Trader have access to the support email address, and the proper person that to answer your question will answer you. Okay, so That is correct. I mean, it has the starter bundle. The Rockstar is a bit advanced. Now, the starter bundle has three of the indicators that are in the Rockstar. So it has the flash, which is divergence, it has the speed tick, and it has oboes. Those three are in the Rockstar. So essentially, you have the Rockstar trade setup. I tell you what, if you would like to see that, send us an email. I don't have NinjaTrader on this computer. This is my presentation computer. I don't have anything set up on this, but we will send you images. Absolutely. This starter bundle right here, you can absolutely trade with this. Absolutely trade the setups that I showed you on this. All right. Now, I have, if you have some specific questions, here's what I'll do. I'll tell you what I'll do. I have this little program I like to use that helps to um, design particular scenarios that people want to see when they have questions about trading and trading this. This is much easier than me scanning around on a chart trying to find a particular uh, circumstance. Okay, so I can create some scenarios here for you guys if you want to see them. So your question was, Adi, if you wanted to see just what the starter bundle has in it, you actually have, and you're going to see a chart that would probably look like. Now, don't get caught up in the colors of the bars because I'm moving things around here without having. Those are the indicators that you can trade this Rockstar setup right there. This is our overbought, our speed tick, and our flash. Traded this for years. Yeah, you could trade either a time-based chart, a very fast one, or a very fast tick chart. I prefer candlesticks because we do take advantage of things like this outline to identify something that's happening here, that we have an overbought condition. Now, that being the case, we also have inside this indicator, if you didn't want to use this outline, if instead you wanted to put a dot or something up here to tell you that this bar is overbought and you prefer the other type of bar, you can do that also. We just like those. Now, here's something that Adi, that you'll see, and you just got to train yourself to look for it, and that is a good hard push. See how price is channeling here? This goes back to what I was talking about earlier. And then suddenly it breaks out and pushes up. And then we have our area of resistance. And at the open of this bar, this would qualify for a short right here. I would short this. On a tick chart, I'm going to do a fast 100 tick chart or so. Real fast. FT reset is this support and resistance line. OTS is just a nifty little tool that we use that allows us to quickly visually identify where our targets and our stops are. So, for example, this is OTS. That stands for open, target, and stop. So if I put on a sell order here, I would know that this was my target and this was my stop. Now, the reason we find this useful is that we want our stop to be behind this resistance. This is what we call our safety net. We're hoping we can see that price reacted to resistance right here. It bounced off of it, brought back, and closed. If this is a good, strong line of resistance, this will help keep the price in our favor and allows us time to manage our trades, which is essentially shortening our stop if we need to. So OTS is this little handy little tool here. This is the FT reset, and you know what the colored, a moving average, very simple, and a bar timer, very simple. We just customized it a little bit to make it easier to use. This is another indicator that we're using to trade the naked rock stars. These are actually a single indicator. They are not available yet, but this will be part of most packages. It's a real simple little tool. It won't cost much, a few bucks. And this will be coming out next week. It's actually ready to go, but we ran into a compiling error that we can't figure out. Actually, I think we figured it out late yesterday. Yes, Rockstar is only available in NT8 moving forward. So right here, this Rockstar in NT8 would have printed right there. I can't believe how long I missed the boat on Rockstar because I didn't think it was necessary because I've been trading this system for so long, just this, that I thought it was just, you get good at something and you forget that other people haven't been doing it for a long time. As soon as we brought this Rockstar out, holy cow, we're getting all kinds of emails and people are thrilled with this. Thrilled. But again, I didn't think it was as necessary, but what do I know? I should have done it a long time ago. It works fine on the ES, David. My problem with the ES is it moves very slowly. And because of that, because it's kind of over bloated, it is not one of our favorite instruments to trade. However, that being said, with the most recent volatility over the last few weeks, I'm starting to notice a few more opportunities that we didn't get before. It's all about trading opportunities, and if you want to trade the ES, that's fine. You're going to have fewer opportunities. We have the ES in the room, but we don't trade it. I don't even look at it. I don't even have a trading dome for the ES. I put it in the room because there are a lot of people that come to the room that they think that they are ES traders and that's all they want to trade because that's the information that's out there on the internet says the ES is the place to be. Of course, that could be 10-year-old information that doesn't have a date on it. So we put the ES in the room simply as something to attract people to want to learn more about what we're doing. 9 times out of 10, ES traders come to our trading room. They watch the ES, but they watch us killing it on the other instruments. And within a very short period of time, they're going, well, I should probably look at the CL and the GC and the 6E and, those others. Yes, speed tick for Ninja 7 we do have. The only thing that I showed you today that is not available for NinjaTrader 7 is the Rockstar. Super D is only divergent signals, Mike. Rockstar combines divergence and order flow and exhaustion together to create a potential trade signal. Super D only gives us 7 different oscillators inside the Super D to read to determine if there's a divergent condition. Okay? So Super D is inside the Rockstar. It's part of Rockstar. And you have all of the control over the Super D inside the Rockstar as far as which divergences you want to use or not use to generate a Rockstar signal. Michael, 5 ticks is our target. When I place an order, I place a bracket order, which is a target and a stop, and the stop is set at 7 ticks. Now, if you were watching that video, you might have heard me say something about prices not moving sideways, so I'm not managing my stop. When price stops doing what we expect it to do, which is to bounce, essentially, if price starts moving sideways, then we've lost a lot of our ability to understand what's going to happen next. And in that case, I'm going to manage that 7-tick stop as best I can back up to break even. Okay, so it's very common that I start with a 5-tick target and a 7-tick stop, but I move my stop up to break even, so I don't. If I get stopped out, I'm out at break even or +1, or I might even get a -3 or 4 or whatever. But chances are, I'm not going to take a full stop. TJ, I don't know. As far as favorites, uh, I used to be able to say for sure it was oil and gold, the CL and GC. The YM and the NQ move really nicely now. A lot better than they used to ever since the TF went to the ICE exchange. Now it's back. It's called R2Y now, and it's back. And to be honest, I haven't had a chance to look at it. But when it did move to ICE, a lot of people started trading the YM and NQ, and those move really well. And for new traders, it's a great place to start because it's only $5 a tick. No, David, I don't use Chart Trader. It's way too slow. The trading dome is much more efficient. I can manage trades much more quickly. And I've had a lot of people say, oh, well, I can do things really quick on Chart Trader. And within a few weeks, and they see how fast that we place trades on trading domes and the ability to manage the trades on trading domes. That's why the dome is there. That's why it was created, because it's much quicker than Chart Trader. Heinz, I recommend everybody use limit orders. Limit orders is the safest thing to do until you've become proficient. When we have such small targets, we have very small targets, right? And in a market that's moving really fast, you can take a lot of slippage if you place a market order. We're expecting a small move, and you could slip right out of that move. So the chances are that if you place market orders, you might take some slippage, and it could be painful. So I want people to learn how to use limit orders. That way you just get left behind. The whole point of that is not to make a lot of money, but to learn the trade setups, to get proficient at placing limit orders. Believe it or not, you can work at your trading with trading orders and get extremely proficient at placing limit orders. With our trade setups, it's kind of cool that we can place a limit order on the open of the bar, right? We're waiting for the open of the next bar to place our order. That next bar might actually back up and give us a better limit order fill. Or you put the limit order at the open of the bar, and then price backs up and you get a better fill. All right, so you're not putting in a stop limit order, you're putting on a limit order. Worst thing about limit orders is you may get left behind. But the best way to learn this is to practice, learn limit orders, grow your account, get really good at that, and then when you can't get your orders filled anymore, then you have to start experimenting with a combination of market and limit orders, which is what I do. I used to, Michael. As far as trading with a trend, I used to, but the probability of the pullback trades um, much higher. They're much easier to predict. Pullbacks are much easier to predict than trends. So I used to do both. I stopped doing the trending stuff because the pullback trades were just killing it. Do I personally have winning percentage or profitability stats? Me? Why would you want to know mine? I've been doing this for years. That's like me asking Phil Mickelson if he could give me his golf score based on the golf clubs he's using, um, and me assuming that I could golf the way he does because of those golf clubs. These are tools. These are tools, and automating this again. Why would you automate it? And since you have to be sitting here anyway, I'm better than automating. I'm a better trader than you could ever automate. I've never even actually seen an automated trading system that works consistently over time. I do. I work really good over time. Not yet once in my entire 10 years plus 17 years at this, not once have I seen an automated trading system that consistently year after year wins. I know that there are a lot of people that say they do. They do a lot of back testing that proves that they will, but it never works out. So I'm not a big believer in automated trading. Have you ever looked at medium line set pitchfork for the path of price? Nope, don't need to. I have a consistently profitable trading system, and I'm personally not trying to overcomplicate it, Michael. Once I got consistent, I stopped looking for changes and just started looking for ways to read what's going on inside the current bar. Not to say there may not be something there, but I try not to mess around too much with success. We've been trading. You know what? Here's something I noticed a lot, Michael, in the trade rooms that I visited when I was struggling, and I would try different trade rooms and different system stuff. I would uh, try everything. I would listen to everything they had to say. I would try to make a complete study out of it. And within a week or two or three, they're changing it. Or they're adding something, or they're creating something new, and it's constant. It was constantly something was being changed or created new, or it didn't apply anymore, or whatever. This was constant for me, and it was so frustrating. We've been doing the same thing, the exact same thing here for years. You can go back and pull up a 5-year-old video and you'll see us doing the exact same thing because it works. I haven't tried the basic entry, TJ. I've been trading on the dome for so long, and it's basically like second nature to me that I have not tried a basic entry. Not in a long time. I may have a long time ago. In NT7, they are, Vicky, as far as being visible and usable in NT strategies. Um, we are making, you have to use NinjaTrader plots in order for them to be used in NinjaTrader Strategy Manager. We are not using NT's plots because they're not sophisticated enough. So we have our own plots that we use inside of our indicators for NinjaTrader 8. That being said, if you wanted to have a programmer customize and create a strategy, go for all about it. We can certainly do that. But you have to use their strategy builder. You have to use custom plots, which our indicators do not do. Frank, as far as complementing Rockstar, yes. Now, let me go back to a slide. I actually recommend the monitor, the speed tick, and the oboes, even though you have the oboes and the speed tick in the Rockstar. This helps me to anticipate the Rockstar. Okay, a lot of our trades happen very quickly. They happen on the open of this bar. So if I'm sitting here and I'm waiting for the strong potential for exhaustion. So I see this, right? And I'm like, oh, these three big up bars looks like what I showed you guys earlier on how the big boys manipulate the market, right? This is this up thrust. So now I've got my attention. My attention is on this bar here. And then it gets oversold. Okay, I know we moved hard and fast, so we have a strong flow, and exhaustion is setting in. And then I know during the course of this bar is being manipulated right here. I know all of these things, so I can anticipate when this pops up. Okay. So I would recommend Mometer. At the very least, I mean, all of these things help. All of the indicators we have help you to make better decisions. But we wanted to start you out with something to kind of get you started. So we're giving you that opportunity for people that want to just get started. If you want a more robust bundle, we have many more robust bundles. We also have the ability to create your own bundle. Just send us a support request and we'll create a bundle for you. No, Heinz, I can't really answer much about Bloodhound or Blackbird. I don't use it. Lisa likes to use it. Lisa will be back. Um, she had some procedures done, and we haven't seen her in a while. She will be back. She's going to be fine. Everything's fine. She's actually going to be concentrating more on her own trading, but she did help to develop the Blackbird and Bloodhound templates, and will be back to help us with that hopefully soon. TJ, the 5-tick target was trial and error and empirical observation over a long period of time. We will generally get at least 5 ticks, not always. So I had to find out where was that threshold where we most of the time get filled, the highest number of times, and 5 ticks was really that comfort zone. Kevin, Rockstar is now available for NinjaTrader 8. Thanks, Chris. Yeah, we absolutely do have a good product, and if you need to verify that with other traders, feel free. We're an open book here. Happy to let you talk to other traders that use these indicators, that are successful with them. We're very happy to let you talk to them. Michael, I'll be happy to. Let me make sure I hit all of the other questions. I'll be happy to tell you about my personal turnaround in trading. I'm going to shorten it though because it's kind of a long story. I'm going to tell the short version. Grigor, if you want the Rockstar only, you have some of our other indicators though, don't you, Grigor? If you do, then Connor's going. Oh yeah, then contact Connor. He'll make you a deal on them since you already own most of the other ones anyway. He'll set you up. Just tell him that I told you to contact him, and just send it at the support desk. All right, let's see. Hey, Michael, don't ask me again. I'm going to go through these other questions. I don't want to get this too drawn out on my personal career. So as I get towards the end, ask me again, and I'll tell you. Um, Good, Steve. I'm glad you got time to spend on our website. Hopefully, you've looked at us on YouTube also. Super D is not in this package, Jim. The Super D, the divergence, there's only one divergence indicator. This is the flash. Um, but we could absolutely upgrade you to the Super D for this starter package and then upgrade you to the Super D if you want. And again, just talk to Connor about that. And Dave, I think you also have some of our indicators, so talk to Connor about that. It's on the website. It's 550 off the website, but if you already own some indicators, he'll give you a deal. I think dome trading is the old way as a template on Ninja 8. It takes care of my trading on 3 contracts to break even with risk out. And I just use the hotkeys on Ninja 8. Can't you just set this up on Ninja 8 to manage trade after you enter your trade? You sure can, David. Absolutely. That's how I do it. Whatever you're most comfortable with. I trade on the dome. But if you're good with setting up ATMs and hotkeys, go for it. I personally can't stand hotkeys for trading, and that's just me because I have to look away from the charts or the dome. I have to look down at my keys, and that's because I'm not comfortable doing it. But I would absolutely suggest that you could absolutely do it that way. Whatever you're comfortable with. I'm just telling people what I do. Dave, I get 5 ticks, and then I pay out of that. I pay commissions, and rarely do I have a lot of slippage from practice. And I mentioned I do have a style of trading that allows me to put in a lot of orders via limit, stop limit, and market. And I don't teach that to anybody, nor do I give videos out, Heinz, because the first thing you'll do is you'll try it and you'll get beat to death. You'll get hammered trying to do what I'm doing because you can't do it with just a few contracts. You have to do it with more, and you can't do more until you learn everything you need to know. It's a process. You have to start at the beginning. Many of you want to jump to the end and do what I do. But if you think about any other skill, you can't just read a book and be a brain surgeon. There are things, and I'm not saying this is brain surgery, but it makes more sense that you would have to go through steps to get to that point when you're finally ready to do that. But for some reason, people believe if you just show me, then I can do it. You're going to have to practice it. And we can teach you how to do that. But don't assume that you can do what I can do. The pullback alert is a little bit different, Ali. The pullback alert is an indicator that's basically like volume spread analysis, if you're familiar with that. Go to our YouTube site, look up the video on volume spread analysis, and it'll go into a much greater detail on what the pullback alert is doing. I can't do all that now. It's essentially reading volume in every bar, but only reporting back on certain types of volume that we find often leads to price stopping and turning. Yes, the flash is divergence. Um, that makes no difference, Dave. That's not going to help you or anybody else. Yeah, if you don't have the time, don't do it. Yeah, Dwayne, if you don't have time, don't do it. But if you do have time, you can certainly work at it to become an expert. I'm not saying you specifically. I'm saying anybody that's trying to get good at trading and make money at trading, if you're not willing to become an expert and spending those kind of hours on it, then you should probably find something else. Now, David, 5 ticks used to be my first target. Now it's my only target. Yeah, Steve, that the support at theintentionaltrader.com, it comes to everybody here, and then we can they'll get sent to whoever the question is intended for. So if you want to ask me or Praveen or Connor a personal question, um, feel free. Now, if it's for me and you don't want it to go through support, you can send it to IT, like it, at theintentionaltrader.com if you want to send something to me personally. Then it'll go outside the support. John, you didn't see, we actually did only a little part of what we did Thursday, and then we expanded on that today. I showed that earlier, Jim, OTS. I showed you that. It's just a little handy little tool to help you see the target open. And this is the open of the bar. And if you were selling here, this would be your target and this would be your stop. This is adjustable, by the way, inside the indicator. You could say what your targets and stops are and adjust this accordingly. If I put a buy on here, this would be my target and this would be my stop. You can color these. It's just a quick, handy little visual reference. Is this $7.95 per month to use your indicators? No, no, this is $7.95 flat fee, one price, lifetime uh, license for those indicators, um, and free updates and upgrades. And when NinjaTrader 9 comes out and they have to be rewritten for that, you get that for free also. All of our NinjaTrader 7 people that owned the indicators for 7, they got free upgrades to NinjaTrader 8, even though it was very expensive for us to do. But once you own it, you own it. James, I put on a bracket order that has 7 ticks stop in it, just in case price takes off against me and I don't have time to manage this. Um, my stop, though, when I manage my trade, and I only manage the trade with my stop. And my stop only gets smaller, never bigger. So if the conditions that got me into the trade change to the point where I never would have gotten in that trade to begin with, then I'll start to shorten my stop. So even though I may enter a trade with a 5 target 7 stop, my stop may end up being 2 or 3 or 4 or break even or +1. It all depends. I'm going to manage my stop on every single trade. Thank you, Grigor. I'm glad it's working for you. Thanks, Ken. Glad to have you. All right, Peter. We'll see you Monday. I hope. Unless you're knee deep in diapers or something. Thanks, Dwayne. 7. That's it. 7. I never, ever, I always put on a bracket order. 7 is the biggest stop I ever use. Yes, ticks. I haven't forgotten you, Michael. I am going to answer your questions. I have not forgotten you. I mean, who doesn't love talking about themselves? It's going to be an abbreviated version, though. The best combination of indicators. Well, it's just like anything else. The more confluence you have, the better. Which is why we have different packages. I know that people may want to start slower than others. Um, the more information you have about what's happening inside the current bar, the higher the probability that you will know what's likely to happen next. So that's a very difficult question to answer. So we give you the starter bundle to start with, and then you can add to it as you decide that you want more and better information. Okay, Michael has asked me about my trading past and what changed things for me. John, in my experience, you can run 7 and 8 on the same computer. I think that your one license will work for both. However, it's not recommended. I'm surprised that they don't have their software upgraded for NinjaTrader 8 yet, other than it's extremely complicated, difficult, and expensive. I would think that they would have that available by now. It's been about a year, I would think. Now, that being said, John, you can use the free version and use our indicators. You don't have to have a licensed version of NinjaTrader. Do I have to use my PC to make it work? To make I don't know. I only had sound in this presentation using my iPad. Did you use a computer? That would be a browser issue you're likely having on your computer, Michael. That's not us. Everybody else can hear us fine. So it's probably, if you're on a computer, it's probably your browser, and you might want to try a different one. Excuse me. Yeah, this click meeting doesn't like mobile devices much either. So my history started with trading like most of you, and I struggled. Kept thinking it was going to be easier than it ended up being. I had a terrible, lost a lot of money, invested in everything there was out there, believed everything I heard, thought I was the dumbest idiot in the world because I just couldn't seem to make it work. I asked myself many times why I was so stupid, and and what was I doing differently than all of the other things in my life that I was successful at. Why couldn't I be successful at trading? And at the time, I was a contractor. If you get your 5 ticks, will you take more 5 tick setups the same day? Yes, I do have a. And when you say 5 ticks, understand I'm trading more than a single contract. But um, the answer to that is yes. I have in my trade plan. I have a goal for the day. Whether it's a winning goal or a losing goal, I have a goal for the day. And that is I will trade live for 3 net winning trades. Net, meaning if I lost the first 2 trades, I have to win the next 5. Okay. So that would net me out to 3 profitable trades. So I will trade for net 3 winning trades or net 3 losing trades. And then I stop trading live for the day and I finish the trading session trading in sim. So those are my rules, and they work out really well. And coincidentally, uh, my income doesn't really vary a whole lot from month to month. Miles, I don't have that information in front of me. Um, you can set it to anything you want. Okay, so I was a struggling trader, and I was about to give up. Man, it was killing me. I was losing my hair. I was like having an ulcer. I'd lost so much money and time, and it was just beyond me, and I could not figure it out. So I kind of had an epiphany one day. Actually, it was something that came to me over time, but it hit me like a ton of bricks one day when I was about to quit. I was I had only a little bit of money left in my last trading account, and over the weekend I had thought, screw it, I'm done. I'm done. I'm done. I'm going to quit. That's it. I can't take it anymore. This is killing me. And so I thought, well, there's still money in my account. So I'm just going to, Monday morning, I'm just going to start just putting trades on left and right until the money's gone, and then I'm done. So I was just going to, basically like roulette, just trying to end I could have just said, oh, there's only a little money. I'll just take it out and put it in my pocket. No, I didn't do that. That would have been too easy. But before I did that, something kind of occurred to me once, and that was that I had this experiment I wanted to try, but I never had the guts to try it because I was still trying to learn trading from everybody else on the internet, from everything I read, from all the stuff that was out there, from watching webinars, from going to trade. I kept doing the same thing over and over and over, expecting different results. So even though I was going to this different webinars, different reading different posts in forums or watching different videos, fact of the matter is I was doing the same thing over and over and over again and expecting something different to happen. I kept thinking I was going to stumble on the Holy Grail. Even though I knew there wasn't one, I kept thinking, well, there's got to be something out there that I'm missing. But I had this idea and thought, I wonder if I could trade? Because and this epiphany came to me one day, right there at the end, when I said, you know what? This kind of started the whole thing. If I could, um, if I'm no better trader today after 7 years than I was the very first day I started. Even though I know more, I've been through more, I've seen more, I understand more, I have no ability to trade any better today, no higher probability of becoming a successful trader today than I could 7 years ago when I started this. And that was kind of a sobering experience for me. That was a big thing. When I realized all that time I was no closer, even though I had 12 monitors and I looked like I knew my stuff. I still couldn't trade my way out of a paper bag. Okay, so hold on, let me answer real quick. So I can program Rockstar in ATM strategy in Ninja 8. If you buy Rockstar, do you receive help to set it up, or is it easy to do? Rockstar comes with an installer, and it's very easy to set up. There's documentation online, and yes, you can use an ATM strategy uh, for your trade setups. Now, it's not to an ATM strategy, doesn't place trades for you. The ATM simply places your stop and target. So if once you enter the trade, then yes, you certainly could put on an ATM strategy however you like. But you cannot use Rockstar in the strategy builder, which is not an ATM strategy, it's a strategy that generates trades. You cannot use it in NinjaTrader 8 for that. It won't, because we use custom plots and NinjaTrader doesn't allow that. Okay? We don't have any indicator trials, Kevin, because we don't know what the heck you're going to do with it. And most of the time, we used to put in a lot of effort into helping people with trials, and it ended up being nothing. Nobody would do what they said they were going to do. They didn't read anything. They didn't study anything. They didn't practice anything. They put it on their charts, and they hoped it was going to generate winning trades for them. And then within an hour, they go, oh, well, I don't know what this means, and they go on to something else. So many years ago, we quit providing trials. But what we will do is if you have a particular chart or whatever that you want us to put it on, then we'll do that. And we'll do it for you. And we'll provide you screenshots or videos of that. The indicators print only in real time, only on the current bar. Which is what you saw in the video. Did you see the video of the trade room? This is a different one. This is Thursday. If you didn't see Thursday, if you went there Thursday, watch. Let me back this up. Oh, it's already changed. Let's see if I can find another one. This was me explaining what I'd just done. Now, not able to see it real good on these, but they print live in real time on the current bar. Go on YouTube. You'll see some other videos that'll help you with that. Okay, so this experiment I wanted to try because I was no better at trading than I was to get rid of these 12 monitors, to open one chart, to look at one chart and see if I could figure out what the markets were doing when they stopped and turned. What was happening just before that? This is where this whole thing started. When the markets would move and we get these big bars and then price pulls back. If I knew what was going on in those big bars, I might have something here. So the first thing I did was check support and resistance. So I had blank charts and support and resistance. And I learned that if price, I got rid of everything else. If price hasn't touched or crossed a major line of support or resistance, there's a good chance it's going to just bounce off of that line. At least a little bit. So I started thinking, Okay, so if it bounced off that line just a little bit and it does it every time, how many ticks do I need? How many ticks do I really need to be a successful trader? For years, I've been brainwashed that I need to end a day of 50 ticks ahead. But do I really? So this was the experiment that I wanted to try but never had the guts to, because I'm still thinking, well, that's just other people would have done this because this seems too obvious. Why can't I make why can't I turn something really small into something just regular? I just want to get good at something. After 7 years, I still didn't even know if it was possible to win consistently. So that was my next mission. Prove to myself that I can be a consistent winner. And what is it? What is a winner? 50 ticks? $100? $1,000? Whatever. Or is it simply walking away having more money in your trading account than you had when you started? So what's a winner? Well, to me, I was always told it had to be X number of dollars, X number of ticks. But I started rethinking that, thinking, okay, let's see if I can prove to myself that I can take this little bit of information, these price running up and hitting a major line of support or resistance. Let's see if I can prove to myself that I can be a winning trader, and see if I can get in and out of trades fast enough to have a net plus number of ticks per day, and stop trading when I get into a positive situation. How many days in a row can I do that? If I can do that, I can prove to myself that I can be a winning trader, and that's what I need to build my trading career on. On that foundation of proof that I can do it. Not that somebody said I can do it. Not a video that I've watched. Not a trading system that says it's the best that there is out there. None of that. Prove it to myself, and I did just that. By ending more trading days as a winner than as a loser. Now I've got this new mission to build on top of that. That was the big thing. That's what turned things around me. Proof that I could do it. Then I started rethinking this whole trend trading thing, this whole thing about having to win a bunch of money. This whole we have in our we have a VIP package where most of our traders eventually become VIPs, and we have a mentoring program that we do every Wednesday. It's called our aha moments, and that was those were some big aha moments for me right there. An aha moment like that opens the door for the next aha moment. You can have an aha moment that changes your complete course in life. And so those first few aha moments completely changed the direction of what I'd been doing for 7 years, because I didn't believe that I was smart enough to figure it out on my own, that there's too many tens of thousands of very smart people out there in the trading world that would have already thought of this. And so it's destined to fail. So these were ahas that came to me that opened doors to other ahas for me to have. Oh, well, if that wasn't true, then what about this and this? And I'd start to analyze that and be like, no, that's not true either. Well, what about this and this? So all these new ahas started coming to me, and I've got a jillion of them. we have these sessions called the aha moments in trading, that I teach all of this stuff every Thursday. And my understanding is it's helped an awful lot of people get a lot better at trading by being able to remove some of these faulty assumptions about trading that we all have when we come into trading. First is that it's easy. Just need to know when to pull the trigger. Just got to trade like a machine. Can't trade with emotion. It's all about money management. It's all about risk to reward. It's all about, there's all of these things that I'd been hearing for all this time that I come to find out it's not true. It's just the same information that sounded good that keeps getting regurgitated over and over and over again. As it turns out, it was what kept me from being successful. So I had decided, you know what, I'm a contractor. I've been a contractor for like 20 years. I'm a contractor. And as a contractor, what is my number one best skill? And how can I apply that to this? My number one best skill as a contractor is a problem solver. For any of you guys that are contractors out there, you know exactly what I'm talking about. You have to do a lot of thinking for a lot of people, whether it's your customer, your suppliers, the people in your office, the guys out on the job site. It doesn't matter. You have to do a lot of thinking for a lot of different people, and you're constantly all day long solving problems that are presented to you. I never approached trading as a problem I had to solve. It was always something that I was hoping somebody else could solve for me. And so I was out there looking to solve this trading problem I had, which was that I sucked. But instead, I chose at this last minute that before I cashed in and and quit trading, I had decided, hey, what if I look at trading as a problem and I have to solve this problem and I forget about everything else that I think I know. All of this information that I think is so important, so valuable. It's all fascinating information, but was it helping me become a consistently winning trader? Not really. Not because I was as bad after 7 years as I was. I was probably worse after 7 years than I was when I first started. Most of us start out, right? We start out the same way. What's this trading thing? Okay, well, I'm going to trade sim and see what happens. You hit the button, you don't even know what you're doing. And you go, whoa, I would have just gotten $400 for that? Holy crap. I'd like to do that for a living. And that's how we get started. And then it gets harder. Yeah, I hope that was helpful. That, like I said, believe it or not, that's the short version. There's a lot more that went into that. And I include all of that in the aha moments in our VIP program. If you want information on the VIP program, just send us an email and we'll get that for you. See you, Yuri. All right. Any other question? Like I said, I'll stay here all day. I don't have anywhere to go. Any other questions about what we do, how to do it? Yeah, I know. It's really easy to make it complicated, isn't it, Steve? Yeah, David, that's a good question. Um, Here's what we wait for. During the open of the equities at 9:30, I stopped trading because of that, because of that volatility. And so what's going to happen, and happens every single day, is that they're going to take an initial push. There's going to be an initial push for the first 5 to 10, 15 minutes. Then after that push, price is going to pull back for a while. Don't know how long. When that pullback is over, that's when we expect things to start breaking into a more natural, trading pattern. So that can take anywhere from 5 to 20 minutes. Yeah, Steve, if there is a company called Top Step Trader that will do that, and we will sponsor our VIPs when they're ready. It's up to them to decide. But the sponsorship to try out for a funded trading account is I forgot what I was saying. Anyway, it's a funded trading account from Top Step Trader. It costs money. That's what I was going to say. It costs a little bit of money, but I will pay for it if you're a VIP and you've done all the hard work. When the pullback is over, so there's a push, a pullback, and then the pullback is over, and price starts moving more normally after that. um, Something like that. Yeah, I think that's it. You can contact Connor and see if he's got some sort of a special on that. I know he's running a special on this. What assumptions are you making there, James? You mean because it's only 5 ticks? You ever run a small business? Would you be happy at 80% profitable running a small business? There you go. You know how many people are scared to death of paying 20% commissions? I'm coming from a guy who my break even every month before I could even pay myself was over $20,000. Every month, my construction business had to generate $20,000 of profit before I made any money. That's a typical business. So when I hear people complaining about commissions and fees, then I have a hard time with that. Yes, I know it's not because you pay them on your losses also. So we have to mitigate the potential for losses as best we can. Uh, the starter bundle, all of the videos that you see online have the indicators for the starter bundle in them, and you'll see lots of trades with those indicators in them, and you can trade with those indicators. But the best thing to do is watch those videos and put those indicators on your charts, and you'll see them set up. So, James, are you suggesting to me that all of the people that are telling me that they're successful and are trading profitably at 5 ticks are not successful because you've done this, you figured this out? Yeah, how about that, Steve? Yeah. So maybe your math is off because I can probably get you in touch with a few hundred people that are doing just fine, huh? That make this work just fine. If you'd like to ask them, send us an email and we'll get you some names. Hey, James, you could have NinjaTrader in 5 minutes from now. You could have it running on your computer for free. NinjaTrader's free. Most people don't know that. Now, what a lot of people like to do, we have a lot of people that come over from like TradeStation or other brokerages and they like their broker, but they want to use NinjaTrader. Fine, chart with NinjaTrader, place trades at your brokerage with their trading dome or however you want to place trades. NinjaTrader's free. All you got to do is provide data to the charts, which is cheap. You just can't trade with it unless you pay for it. So if you already have a way to trade with your broker, use that. We'll help you set it up. We'll help you install the indicators. We actually have an installer package where all you do is double click on it and it runs you through the installation and loads all of the indicators into NinjaTrader. It loads some chart templates. It loads some indicator templates. And it has everything, and it'll even load a workspace that's like our trade room workspace. So it does all that for you. You don't have to set it all up. We'll do it for you. I don't know about that, Frank. I know it used to. I'm not sure if it still does. I'm sorry, I don't know. But the you could get another data provider for not much, 35 a month or something. I don't remember. I don't have to pay it, so I don't remember how much it is monthly fee. James, all you would have to do is go to our support desk and request that Praveen help you set it up, and he'll actually, if you're not comfortable, there are people that are not comfortable with doing anything on computers, and we understand that. So he'll actually remotely come on your computer and do it for you if you'd rather. No, we have other bundles, James, that has the Rockstar in it. If you want the Rockstar, just let us know and send us an email, and um, we can suggest other bundles. This is just a starter bundle to get you started, but we have other bundles that we can um, suggest to you, and I'm sure Connor will give you a discount um, for the webinar special. No, for further questions, right here, support at the Intentional Trader. If you have a personal question for me, use the IT. Michael, you're going to initially you're going to take fewer trades per day than I do because you still have things that you need to learn. But I'm going to say on average, we have people that'll trade 2 to 3 times a day. We have people that'll trade 10 to 15 times a day. And again, you'll understand more about that as time goes on because you're going to actually define your own trade rules. That's one thing that I didn't even talk about today, and that is that if you're a very conservative trader, you can tune our rules slightly to be a very conservative trader. If you like to be more active and a little bit more aggressive, you can slightly tune the rules to be more active and aggressive. Totally up to what you want to do. I generally want people to come into this being very conservative, only taking the most conservative trade setups and do it and learn it slowly the way we do and learn and master everything in our lives. We start small, we gain a little bit of competence, and we go from there. And that's where I would want you to learn. I mean, I would really prefer that you just sit and watch for a while and use our fast forward program to practice for a while before you even pull up any charts during live trading. There's no point in trying to learn trading during live trading hours. There's no point in it. It's an exceptionally inefficient way to learn. We have people, Frank, although they haven't reported back to me how successful they've been. I have had a guy report back to me that he's used 15 minutes successfully. Beyond a 15-minute chart, I really don't know. It's really not intended for that. Range bars, I don't know why anybody uses those stupid things. Now, this is better for a time-based chart. Range bars make pretty charts though, don't they? but you're but you're filtering out you're filtering out valuable information. We all live in a time-based world. I want to know what people are thinking and when they're thinking it. Not just what they're thinking, but when they're thinking it. It's all intertwined. Only 3 years. Yeah, I I don't get range, but I don't get the whole idea. I know it sounds good to remove the noise. I hear that, when people say they use Rinkos and ranges and stuff like that. They say, "Oh, I'm removing the noise." Well, to me, that noise is music, and I couldn't trade without it. Now we trade on a 1 minute chart, David. Yes, we use David the 24/5 default 24/5. Yep, that's what they're based on. We don't want the weekend hours. We don't care about what happens over the weekend. So default 24/5 is what you want. All right. More questions? Or are we thinking about lunch? Sounds like lunch. Well, if you think of more questions or you don't want to ask them here, right here, support at theintentionaltrader.com. Got a team of people here that'll answer them for you. Back data of what? Thanks, Ken. Back data logs, markets, times, points, etc. That's called market replay, and it's inside of NinjaTrader, or they call it playback now. It's an awesome tool. Well, except the new version kind of sucks in NinjaTrader 8, but I'm working on fixing that. Yeah, it's an awesome tool. It's what we teach you how to trade on. This sitting and trading and live trading hours during the trading day is dumb if you don't know what you're doing. Why not get 90% more practice done in a fraction of the time than just sitting and waiting for a trade setup? We teach you how to do that in our Fast Forward program. Yeah, it's inside NinjaTrader. It's called, in NinjaTrader 8, it's called Playback. In NinjaTrader 7, which it was much better when it was in 7, it's called Market Replay. But we have a utility that we're building that hopefully it'll work and it'll make the one in Ninja 8 better. Or instead of, we'll create a new one, brand new one. It's not going to be a cheap endeavor, but I teach people how to practice. Now they've given me a crappy tool, so I got to make it better. Yeah, I got a couple of suggestions for you, Kevin. If you want it on two computers, we'll sell you a set for only 25% of the price of the first set. Or you can do like what I do, and instead of having lots of indicators on lots of computers, you could, if you're wanting to have them on your laptop while you travel, what I do and what we have other people doing is just use TeamViewer. Have it running on your computer at home, and then use TeamViewer to, as long as you have a good internet connection on both ends. TeamViewer works really well for that if you don't want the expense of having them on both computers. That, Frank, and that's pretty interesting because we are absolutely buffered from that. Well, not completely. I mean, we do get caught by it every now and then, but by and large, we're buffered from that. He's killing me. That's hilarious. All right, everybody. Well, thanks for coming. Glad we could answer your questions for you. I hope we get to see you guys very soon as a member of our trade room, or as a member of our VIPs, or just getting started. Now we're here to help. We're always around. You can hit us up on chat from our website, or send us a support request. And if nothing else, we're a wide open book for you guys, and we'll answer any questions you have. So again, thanks for coming. Have a great rest of your weekend, and we hope to see you all soon.